Credit Score 101: Understanding and Improving Your Credit. Are you tired of being denied for loans or credit cards because of your low credit score? Do you want to improve your chances of getting approved for a mortgage or a car loan? Look no further, because in this video, we're going to teach you everything you need to know about credit scores and how to improve yours. From understanding what a credit score is and how it's calculated, to practical tips and tricks for boosting your score, we've got you covered. So, sit back, relax, and get ready to take control of your credit score and take the first step towards achieving your financial goals. Let's dive in. Hello and welcome to Credit Score 101: Understanding and Improving Your Credit. In this video, we're going to cover everything you need to know about credit scores, including what they are, how they're calculated, and most importantly, how you can improve yours. First, let's start with the basics. Your credit score is a three-digit number that ranges from 300 to 850, with higher scores indicating better credit. It's used by lenders and financial institutions to determine your creditworthiness, or how likely you are to pay back a loan or credit card balance. Your credit score is based on the information in your credit report, which is a detailed record of your credit history. There are several different types of credit scores, but the most commonly used one is the FICO score. This score is based on 5 factors: payment history, credit utilization, length of credit history, types of credit in use, and new credit inquiries. Payment history, which makes up 35% of your FICO score, looks at whether you've made your payments on time. Late or missed payments can have a negative impact on your score, while on-time payments will help to improve it. Credit utilization, which makes up 30% of your FICO score, looks at how much of your available credit you're using. It's generally recommended to keep your credit utilization below 30%, as using too much of your credit can lower your score. Length of credit history, which makes up 15% of your FICO score, looks at how long you've been using credit. The longer your credit history, the better, as it demonstrates that you're able to manage your credit over a period of time. Types of credit in use, which makes up 10% of your FICO score, looks at the different types of credit you have, such as credit cards, mortgages, and auto loans. Having a mix of different types of credit can improve your score. New credit inquiries, which make up 10% of your FICO score, look at how many new credit accounts you've opened recently or how many times you've applied for credit. Each time you apply for credit, it can have a negative impact on your score, so it's best to limit the number of new applications. Now that you understand how your credit score is calculated, let's talk about how you can improve it. The first step is to check your credit report for any errors, as these can lower your score. You can get a free copy of your credit report from each of the 3 major credit bureaus, Experian, TransUnion, and Equifax, once a year. Next, work on paying down any outstanding debts, particularly credit card balances. High credit card balances can negatively impact your credit utilization, which we discussed earlier. Also, make sure to pay your bills on time every month. Late or missed payments can have a major negative impact on your score. You can set up automatic payments, reminders, or calendar notifications to make sure you never miss a payment again. Another way to improve your credit score is by getting a secured credit card. This type of credit card requires a cash deposit as collateral, but it can help you build up your credit history. Just make sure to use it responsibly and pay off your balance in full each month. Keep old credit accounts open. Length of credit history is a factor in your credit score, so keeping old credit accounts open can help to improve your score. Even if you don't use them, it's best to leave them open and active. Use your credit regularly. An inactive credit account can be seen as a red flag, so using your credit regularly can help to show that you're using it responsibly. Just make sure to pay off your balances in full each month. Be mindful of credit card limit increases. Every time you request a credit limit increase, it can result in a hard inquiry on your credit report, which can lower your score. So, be mindful of how often you request a limit increase. Avoid credit repair scams. There are many companies that claim they can fix your credit, but most of these are scams. Instead, follow the tips outlined in this video, and be patient, your credit score will improve over time. Be careful with co-signing. When you co-sign a loan or credit card, you're responsible for the debt if the primary borrower can't pay. So be careful when co-signing and make sure you can afford to take on the debt if necessary. Diversify your credit mix. Your credit mix, credit cards, loans, etc., is also taken into consideration when calculating your credit score. Having a mix of different types of credit can help to improve your score. Limit credit inquiries. Each time you apply for credit, it can result in a hard inquiry on your credit report, which can lower your score. So, limit the number of credit applications you make. Make use of credit counseling services. If you're struggling to manage your debt and improve your credit, consider reaching out to a credit counseling agency. They can provide you with budgeting advice and help you develop a plan to get your finances back on track. Pay off collections. If you have any collections on your credit report, it can have a negative impact on your score. Try to pay off these collections as soon as possible. Monitor your credit regularly. Keep an eye on your credit report and score regularly to stay aware of any changes and address any errors you find quickly. Be responsible with secured credit cards. Secured credit cards can be a good option for building credit, but make sure to use them responsibly. Avoid maxing out your credit limit and pay your balance in full every month. Seek professional help if necessary. If you have major financial issues and can't seem to get your credit score on track, it may be wise to seek professional help from a financial advisor or a credit repair specialist. They can help you understand the best ways to improve your credit and tailor a plan for your specific circumstances. Finally, be patient. Improving your credit score takes time, but if you follow these tips and stay disciplined, you'll be on your way to a better credit score in no time. By implementing these tips, you will be well on your way to improving your credit score. Remember that consistency and discipline are the key to a successful credit improvement journey. Keep track of your progress, and don't be discouraged if it takes time. With the right mindset, you can improve your credit score and achieve your financial goals. Thank you for watching. We hope you found this video helpful. Remember, understanding and managing your credit is an important step in achieving your financial goals, whether it be buying a house, a car, or getting a loan. With the right tools and knowledge, you can take control of your credit and improve it over time.